think, act, and prosper. You are now tuned into the Money Level Show.
Hey everyone, today we are joined with Dave Collum, professor at Cornell, but today you're not representing Cornell's views, I assume. This is Dave Collum's dark side economics outside of work.
I've had the president of the university declare that I don't represent their views. So she's only done it twice in her career. She was wrong at two levels. One was that she doesn't either, because it's a very diverse group of characters. And the second was she was dead wrong about the facts when I challenged something and the world thought it was appalling and I was correct.
Yeah. What's it like being like a internet kind of star, and then do people hear about your name at work, or students, do they come to you?
And a lot of people don't mention it. I've had colleagues give me some guff. I've had colleagues who I think, to the extent that that I inadvertently represent the chemistry department, I think there's colleagues who maybe wish I would shut up, but life's tough. If a tenured professor can't speak up, then who the hell can? So I had one tell me that he thought it was appalling that I questioned the 2020 elections. I said, well, but they look pretty rigged to me, so I don't see why I shouldn't, right? And he says, you have no facts whatsoever. And I go, no, I do. You don't. Right. And so, I think colleagues would probably rather I not speak up, but no one's given me real guff besides that one presidential moment. And even then, the provost, actually the current president, he's kind of a friend of mine. So, I talk to him occasionally, and he's glad I'm staying out of trouble, the sort of the real high visibility stuff. But what they don't understand is that there's an awful lot of wealthy alums and stuff out there who are glad to hear that not everyone on a campus is whacked out of their minds. And so, and in fact, I got a call from my brother-in-law who's a trustee, and he quoted one of my tweets. And I said, where'd you get that from? His name is Ezra. Here, you want it, is Ezra Cornell. Turns out he's a trustee by birth. I said, where'd you get that? And he said, my boss. I said, Daphne, where'd she get it? And he said, no, my other boss. I said, he's an independent financial advisor. And he said, no, the chairman of the board of trustees called me. And I said, he said to me, there's hope. Because here's a faculty member who's not some whiny bitch complaining about how bad their life is as a faculty member at Cornell, which is just an outlandish idea. And he says, do you by chance know this guy? He says, yeah, he's my brother-in-law. So they had to laugh over that. So in any event, I don't hear too much from the rest of the campus.
Yeah. I mean, it's like one of those things with, like, even with my show, like I honor, free speech. Obviously it's like that's under attack in a lot of ways, and I think that it's healthy for people to be challenged in different ways and with different views and different facts. Like, there's always I've seen both sides of a coin pull out data points and argue it, and you're like, okay, which one's true? Are they both true or what? And so that's healthy. That's healthy to have. And I mean, I just don't think the world lives in an echo chamber. It's not an echo chamber.
I remember you're in HR. Do I remember that correctly?
Yeah. Yep.
Is that okay? I have a book for you. I know that your life is busy. We chatted before we started that your life sounds busy. When you have kids, your life is hyper busy. But a book by Jonathan Turley called The Indispensable Right is about the battle for free speech since the dawn of the American experiment. And on the one hand, it's uplifting because it turns out we've been here before. So we have attempted to shut down free speech with various legislative acts since since John Adams, and who was a bit of a douchebag actually on the point. And Jefferson, interestingly enough, was kind of hypocritical. Jefferson supported free speech until someone criticized him, and then he stomped on him. Madison was the only guy who was actually a purist, and he goes through all these cases all the way till the present. I'm not quite done, but he's just now starting to beat on what's going on in the modern era and how bad it is. But it's a phenomenal book called The Indispensable Right. So if you want to understand the free speech battles, that's the one right there.
Gotta check that out for sure. That sounds actually because I love history, and it's good to.
Oh, you'd like this then. You'd like this then.
Yeah, especially when someone could put it all together to where you're not having to go to multiple different places, and that's very helpful. There's a big Supreme Court case that I was working as a volunteer mentor at a high school, Bremerton High School, and this was when the whole Coach Kennedy saying the prayers on the 50-yard line and everything, and that ended up going to the Supreme Court, and and he was like, "Hey, I'm fighting for my first."
What was the outcome of that? What was that? Remind me what the outcome was. I remember the case. I don't remember what they decided.
Supreme Court ruled in his favor, saying that he was exercising his First Amendment rights.
Okay.
And so that was like I was there in that that energy and just everything. It was pretty toxic. But so it's I'm an advocate for people having a voice, and people being able to share.
Well, so Turley will challenge you because Turley will take on cases where all of a sudden you go, oh boy, there's multiple layers to that onion. So there's some that are horrific. Some cases are just, I can't believe they threw that guy in prison. The Supreme Court supported that move. But there's others where you're going, geez, Louise, I'm just not quite sure where I come down. And then you realize that you can yourself inadvertently not support free speech based on your views when you think about if he really digs deep into the layers of the onion.
Okay, yeah. I need to look at that because there may be some times where you're like, yeah, that one right there.
Yeah, set Pelosi's face all up there, and then you're going, oh, I'm not sure how Turley would come down on that one, right?
Mm-hmm. Yeah, so, for sure.
It's a good one. He should be in the Supreme Court. He really if Trump gets elected and he gets another nominee, Turley ought to be the guy.
Yeah, for sure. All right, so we got some heat coming up. I mean, we're what, 3 months, little less than 3 months from the election. And I know that people are anticipating what the markets will do, which candidate wins and everything. We've been here multiple times, right? What's your outlook on whichever candidate wins? What's going to happen with markets, commodities, and gold? I want to know what happens with gold.
Generally, I don't think stuff like this matters as much as most people give it credit. I think, we had 4 years of Biden and he wasn't even driving the cab, and somehow we did some awful stuff. I got in an argument with a colleague and I said, look, he said, well, what did you do that was bad? And I said, well, he let 4 million people across the border, some of which are likely to become terrorists. So there's that. Dropped $200 billion into Ukraine in a war that I don't support one bit. So there's that. And I said, he's done some catastrophic things, in my opinion. He's also illustrated, maybe this is a positive, that we don't actually know what the presidency is about. Because if we can get through 4 years with Biden, who's just a Looney Tunes at this point, then how does the system actually work? And I have faith that all the predecessors could handle a crisis. I have no faith Biden could have. I have no faith Harris can. Maybe she's duping us. Maybe she's playing the idiot and sort of reeling us in like a bass or something. But but she sure looks like an idiot to me, and I think she looks bad enough. Did she not show up at the DNC? You can imagine I didn't watch it because I couldn't stand watching it. But did she not show up at the convention? Do you know?
I have no clue. I didn't watch it either.
Yeah. Well, I think she didn't show, which is amazing because it means they hid her even from at the national convention. It's just amazing to me that they would do that. The problem she poses is that her views, which again are campaign promises, not action. So you got to remind yourself of that. And I'm pretty confident she can be bought off by the guys who buy off every other president. But some of the stuff she proposes is so outlandish that you fear that if the presidency does matter, we're going to be in trouble. So I'm kind of hoping it doesn't. But it's a weird conclusion.
What about the whole? There's a lot of talk about price controls and
Yeah. She just, I mean, no one with a half a brain would propose price controls. They've never worked, never have, always a disaster, produce shortages. The only guy stupid enough to propose them from a position of authority is Krugman. And he's notorious for saying stupid stuff. I mean, one time I put together a collected works of Paul Krugman, and I just put in all his quotes right down to General Tso's chicken. I once years ago made reference to Steve Hanke about how Krugman, something giving Krugman some latitude, and he just shredded him. He just said, "No, Dave." And I go, "Okay, I stand corrected." I thought there must be higher order brain function in there. So I don't know. This one could matter, although probably not. But if we get into World War III, it'll matter, and that I worry about that one. I think, and I don't think we will overtly start World War III, but I see politicians who don't seem to respect the risk. They really, you can tell they don't because just the things they say in public are absurd, right? Harris being one, we should attack the Russians years ago, stuff like that. And you're going, oh, come on, Kamala. I hope that's not the official policy stance. So.
Yeah. And then what's your view? I mean, obviously, these things come and a lot of people put hype behind what's going to happen under either candidacy or in either presidency, whoever wins. And so what's your outlook if Trump were to win? I know there's a lot of crypto bugs that are like, okay, yep, he's supporting it. He's threatening to fire Gary Gensler versus I think Kamala said that she's going to hire him or something like that. And so there's some division there.
I think at this point in time, you have to support the guy who causes the least amount of emotional pain for 4 years, right? And so Trump's economic policies, unfortunately, are guided by a lot of street experience, but then totally negated in a sense by his narcissism. Now, it is possible that what we're seeing in his first term was his nonstop effort to get reelected. And so maybe there's some reason for optimism. We'll see a different Trump show up if he does get elected. I'm not optimistic that he's going to get elected because I think people will actually vote for Kamala, but I think they're just going to rig the election again. They're teeing us up. They're trying to convince us that it's a fair fight. They're trying to convince us that it's an even battle when I just don't believe it. Actually, she was 3 months ago. She was hated. They were talking about if Joe steps down, we can't have Kamala, right? I mean, the whole DNC was saying, "Oh, it can't be Kamala. I mean, she's just awful," And they're talking about Newsom, and she was not even on the ticket on the discussion, best I could tell. And now all of a sudden she's a hero, and I'm going, no, I don't buy it. I know far left wingers who are repulsed by the idea of her getting the presidency. I mean, I got as many electoral college votes as she did, right, in her first attempt to be president. So there's that. So now but Trump also could blow it. I mean, he's idiosyncratic enough. I think his economic policies, that's where his narcissism most shows up. I don't think he can bite the bullet. I don't think he can take the tough route.
Yeah, yeah, exactly. So I recently had Doomberg on, and Doomberg had mentioned some really key points that I didn't really consider. He had mentioned about if Trump would have been assassinated, like the type of social upheaval and that could have caused if that assassination attempt would have happened, and then if there's an election that people do not believe is true, and say like the election goes in Kamala's favor, and people do not believe that, like he showed a lot of concern for what happens to the society, if there's civil war or anything like that. And I was like, yeah, that's pretty grim. Yeah, like that's, yeah, I mean, that's
Well, you want a real interesting one is watch. There's two. One is Brett Weinstein being interviewed by a guy named Stevenson. He was really good. I should remember his name for that reason. But Brett went through 2.5 hours of what scares him, and Brett's so thoughtful. And then there was another one that just left my brain, but I don't know what a civil war looks like, right? I mean, there's no Mason-Dixon line, there's no slave state, free state, there's no North-South, there's no. So people could just get pissy as shit. They just get nasty with each other, and I'm not even convinced of the response to him almost getting killed, a quarter of an inch away from getting killed, and the fact that the authorities clearly are hiding the story. I mean, they covered up the crime scene, they did everything. So it seems very clear to me that he was not shot at just by some crazy kid. Which, by the way, all these shootings by the crazy kids I think are deceptive. I think there's more to almost every one of them. I was in an investment conference once. I was on a panel, and they said put forth a hypothesis, an outside the box hypothesis, without defending it. Let the audience ask you about it. And people put a bunch of shit out there, and I said I think almost all the shootings in the United States of the famous kind are sponsored by some state, either us or another one. And that got a ton of questions. I think there were a lot of people who were glad to hear it too, because we've been suspecting it, right? And there's always multiple shooters. The stories never hold together. So
yeah, that's pretty. Yeah, that's actually pretty interesting, because I mean, you look at like JFK, and all the talks of mafia being involved, and many other.
Oh, Peter Thiel's the other interview. Peter Thiel on Joe Rogan. I couldn't remember. They talk about it. And Thiel takes this interesting. Thiel finds layers of the onion that I just normally wouldn't have found. And he says one of the odd things is that it shows how incompetent we've become, because he said, half a century ago they would have got him, right? And they missed him, right? How do you miss him? So
looking ahead to markets, a lot of investors are anticipating a Fed rate cut. I am. In terms of my call options, I do have a couple of charts here I actually want to pull up that shows.
Let me see them.
That shows what happens when the Fed cuts rates, and so
it's not good news.
It's not
good news.
I'm trying to buy the hype, sell the news here.
Someone questioned that. They said everyone says when the Fed starts cutting rates is when the market turns down, and then I think it was Mish or somebody said, no, it actually turns down before they start cutting rates. So there's that one, and those the Fed fund rates in the red, and the market and so the rates follow the market down, right? It's actually rather extraordinary. So. And in the last two, look at 2000, the market dropped, crudely 50%, a little more than that in 2007. The top of the rate cycle represents the top of the market. The bottom of the rate cycle pretty much represents the bottom of the market. And it reminds me of the people who talk about how hiking rates is bad for gold. And I go, are you unaware of the fact that rates rise with inflation and that hiking rates rise with inflation? So they really ought to correlate. And are you unaware of the 1970s where they both soared together? Is that too ancient history for you? I don't
I'm
get
actually
it.
gonna pull this one up. This is total assets, U.S. funds rate, and the gold price.
Well, so here's the question that people should be asking is, do the feds have the ammo to yet again come in with, $10 trillion to save the system? And I would argue that inflation is not in control now, so that if they think they've somehow wrestled inflation to the floor, they're dreaming. I think it's a different kind of inflation. I don't think it's they talk about the economy burning hot, and I go, are you witnessing the same economy I'm witnessing? Because I don't see it burning hot at all, and I don't think it ever burnt hot. I don't think I don't think the post-COVID economy ever burnt hot. I think it's been broken. Right? Try to get something done. Right? Try to hire a plumber. Try to get health care. Nothing works. And so this idea that by Fed hiking rates, you somehow can get control of inflation. That is a model that assumes that the inflation is coming from, sort of a cost pull inflation, I guess they call it, where it's just too much demand for money. Whereas I don't think that's the kind. I don't think that's what we witnessed.
So looking at this chart, I'm looking at the Fed's total assets. It looks like the balance sheet of the Fed. Then you have the funds rate and the price of gold, the futures price of gold, and it looks like every time they cut, they start since 2008 they start increasing the balance sheet and the price of gold goes higher. From what I'm seeing on here.
Yeah, could that be though not so much the inflation in the U.S., but rather the whole BRICS fiasco that we're facing now, where the central banks are driving the price of gold because they don't trust us anymore?
Yeah, definitely. I mean, that's definitely, there's something.
Because I don't trust us anymore, so I don't know why they would.
Yeah, for sure. So it's pretty interesting when I'm looking at.
I wouldn't have. By the way, I hadn't watched it for a while. I'm surprised at how much the Fed balance sheet has been shrunk, and notice it's still shrinking, which means they're still tightening by, according to some economists, that shrinking the balance sheet is tightening. I guess that's true. I think just holding it high, which this isn't even high. I wish they would just leave it there. I wish they would just not lower at all. Just 5% is not an irrational number to me. And people say, well, it depends on the economy. No, it doesn't. Let the economy chase. Let the economy do what it does. Let just leave the Fed funds rate alone.
Mm-hmm. Yeah. So you mentioned.
Why not?
So you mentioned inflation, and historically countries have devalued their currencies. Like that's usually the route that they've always went in terms of whenever allowing inflation to run hot to devalue the currency. When debt gets so high, deficits become so high. I mean, because I just don't see that there's any. I think we're just part of we're at the point of no return in terms of like how much your dollar can buy you, and I think that continues to shrink. I'm feeling it. Many other people are feeling it, and I just think that this currency devaluation is happening. I mean, it's been happening, but like I actually feel it and experience it now.
Well, yeah. The economists were all shocked that you could have a thing called stagflation. I remember when I was young, and the economists were, oh, you can't have inflation and stagnation at the same time. I go, let me see if I got this right. My dollar buys less than it used to, and that's not stagnating. I mean, how do you not have stagflation is my question. That's the question I would ask. people are feeling a tremendous amount of pain, and maybe the inflation rate's not as high as some of us think it is. I mean, what do you think the real inflation rate is? What do you think what is your inflation rate? How's that? Let's put it that way. What's your inflation rate?
I have a big report from Shadow Stats I got to read. I haven't read it yet. But I know
they'll put it around 10%, right?
Yeah. They usually double. It's usually double, a little bit more than 2 times the CPI rate. But from last time I looked at it,
and Chapwood is also at about that level. The Chapwood inflation index is about that level, and then you've got this thing called Trueflation, and I see a lot of smart people talk about Trueflation like it's some answer. I think Trueflation is bullshit. I haven't looked at how they get it, but the fact that they trumpet it as remarkably successful at tracking the CPI, I go, well, that is bullshit because the CPI is bullshit. And so, and so I got to dig into Trueflation because I've denounced it without actually knowing how they do it. But I just know that the numbers that Trueflation come up with, I just don't believe. Now I know guys like Jimmy Iorio, who not only is known for his trading skills and his CNBC presence, but also he owns a restaurant in Chicago, and I'm always talking to him about the inputs costs, and they're just soaring. I go to a local diner. I said, "Is the price of your input still going up?" He says, "Oh yeah," and I said, "Up more than 3% a year?" And he says, "Oh my God, yeah." Right, so. People who, Cornell's trying to sign a contract with their staff, not faculty, but the workers. And they offered them something like a 17% raise and a COLA adjustment, and the UAW said no, thank you. Right, and so that's inflationary when labor picks up momentum again. The power of labor picks up momentum. Then it becomes embedded in the DNA, and you've got a tough time fighting it now. And Volcker, they say he slayed it. I'm not even convinced I understand Volcker's role in inflation. I got an argument with the vice president of St. Louis Fed. In what started on a Twitter exchange ended up on an email exchange. And he basically said Volcker's policies were deflationary or disinflationary at the start, became inflationary. And then the question is how. And the more after the conversation ended, I've been thinking about a lot. And the point is, when rates were at 15, 16, 17% in that range, that means that every money market account, every bank account at the end of the year had 17% more than at the start of the year. Where'd that money come from, right? And that's an interesting question that I find harder to answer than it ought to be, because they talk about creating money through debt. But then the question is, what debt was being created during the stagflationary 70s? Where was that money coming from? That's what I want to know. And if there's an economist out there, send me an email. Tell me where the money came from. But in any event, there was 17% more each year during that really bad period. And so now they say, well, the Fed funds rate was, so much higher than the real rate of inflation. That's why it slayed the inflation. But still, I remember those money market accounts being incredibly profitable, and that's a growth in the money supply. I should go back and look at what M2 did during that period. Interesting question. The markets, by the way, for those who think they're going to get rich off the markets, you get rich for a while, and then all of a sudden you get the crap kicked out of you, and then you say, well, but that was exceptional, and then you move on. A friend of mine named Ron Grice runs the chart store. Sent me a chart one day that I don't even know if he personally has published, but it shows the last 100 years of the S&P corrected not for the CPI, which is what a lot of people would like. A lot of people don't even want to look at that, which is insanity if you don't correct for inflation. You should also, by the way, correct for population growth, which is a factor of 4. You should correct for foreign ownership, which, by the way, means therefore the S&P might be getting more valuable, but that pie is being eaten by people all over the world now. And so there's a lot of things you really ought to be correcting for, or at least mentally. not necessarily in the numbers, but he corrected it for M2 money supply, which seems like a pretty crisp, clean way to correct for inflation. And over the last 100 years, it went down, not up. That's a staggering reality. That is a stunning reality. And the CPI corrected market during the 20th century several different times, treaded water for 75 years. If you own the market in 1906, inflation corrected, your capital gains were identical. There was zero capital gains in 1981. So from peak to trough, you can get crushed for decades. And I am the most bearish guy on Twitter. I mean, there are people who say, yeah, the world's going to come to an end. Okay, I'll give them the most bearish stance. But in terms of just assuming markets will behave, assuming the economy won't get crushed in some weird way, assuming that the next 40 years is reasonable compared to any previous 40 years, I think your inflation adjusted returns will be nearly zero.
Yeah, because you see the nominal price of the S&P, going up. Markets go up for 100 years, but then so you're saying that someone adjusted that for the M2 money supply, and it shows
goes nowhere.
Wow, yeah,
goes nowhere. 1929 broke even in I think it was 92.
Mm-hmm.
It's really staggering. But it turns out that's the CPI adjusted. The M2, it actually is down since 1925. I think it's 1925 it goes back to. That would be 100 years, of course, but I think that's what he starts at. The markets treaded water. Slight downward slope. If you then do the total return by including dividends, which by the way used to be way back when 6%, now they're more like 1.5%, which kind of tells you the market's maybe overvalued by a factor of 4. Then it turns out you get about 3.79% annualized return, provided you don't include fees and taxes. That 3.79 is going to be heading to zero pretty fast when you take out the fees and the taxes.
Yeah, that's true. I want to share this chart really quick. So this is so you mentioned the S&P goes down. So this is gold adjusted for inflation. And as we see, back in the 70s to 80, I mean,
macro trends is a great source for charts, by the way. Those who are casual observers, macro trends charts, that site is phenomenal for creating charts.
Yes. I've been going to them for a while. So seeing this chart, I mean, it looks like we're getting closer to the I guess the all-time high adjusted for inflation. How do you see gold continuing to perform from here on out? I mean, it looks like an inflation hedge. I mean, it's always been throughout history, and we're seeing that perform. We're seeing that in the price, but looking at the inflation adjusted returns, I'm wondering if it needs to pass this 1980 level for any reason or not.
Well, for the record, just I'm declaring victory. I bought serious amounts and continue to buy, but I started in 1999. So look at your chart there. Right there. I was paying, well, that's inflation corrected. So I was paying between $270 and $290 an ounce. I bought it steadily up to around $457 an ounce. And then if you go up to past the peak, the first big peak, keep going past that. Somewhere when it got down, keep going now, keep going to the right. Yeah, somewhere when I felt it had stabilized. I'm not a chart guy, but I thought, okay, the sellers seem to be sort of missing now. I bought another wad. So I was buying silver at under $4 an ounce.
Wow. Yeah. Those are some good days. I look at the charts and I'm like, man, why wasn't I? I mean, I was like 12 years old and
I'll tell you why. The bottoms are marked by the fact that you can't find a person on the planet who thinks it's a good idea. So I knew about 5 guys who thought buying gold was a good idea, in that 99 to 2001 window. It was a ghost town. And Bank of England was selling, and every time they sold, the price would go down again. And every time they'd announce they were going to sell some more, the price of gold would go down. It's called the brown bottom, actually, because he sold off all England's gold. And when they finished selling all their gold, marked the bottom of the gold market. So, but no, it's. I was laughing about it with Chris Martin one day, where he said, I have people say, well, it was really easy to buy gold back then. It was so cheap. But I go, it's cheap because nobody wanted it. And so to be a contrarian is a perpetual state of discomfort, Although I seem to thrive in being a contrarian, not always right, but I seem to like to tell people they're full of shit.
Mm-hmm. Yep. So looking at some of the reasons, so I had dabbled in palladium recently when it was down significantly. It's still down, but I had dabbled in it because it just seemed hated. It's not really looked at. You don't hear it talked about.
Look at platinum. Look at platinum.
Yeah. I gotta go check out platinum's chart as well.
The platinum miners, unfortunately, in South Africa, and they haven't played out well. They look like incredible value plays. They've been stagnant as hell, and I've been trying to figure out why that would be. And it could be South Africa. It could be the projected demise of the catalytic converter, which I don't believe. I don't believe the internal combustion engine is going to be put into a grave the way the climate changers think. And so, in any event, there's three large platinum miners, and they had cash in the balance sheet. They had unbelievably low valuations, dividend yields between 7% and 9%. But they've just sat there. Now I've been collecting a dividend, so there's that. One of the companies screwed the pooch and started. See, that's the mistake that gets made. The gold miners got clobbered because they made mistakes. Instead of just saying, look, gold will come up and then we'll get rich, they hedged everything. They blew everything. And more than one CEO has gotten an earful out of me at meetings or something, which I said, you guys completely screwed the pooch. If you had just kept mining gold, right? If you just stayed with your business instead of turning it into a bunch of hedge funds, you would have done well. I try not to stock pick. I try to identify big mother trends. And so I picked energy in 2001-ish and went pretty aggressively, pretty steadily into energy, not because I knew about the commodity per se, but because I thought inflation was going to show up more aggressively than the CPI showed up. I mean, there's always inflation, of course, but I just got lucky on that. My attempt to hedge inflation caught the energy. So my best decade was from 2000 to end of 2009, and while everyone else was getting crushed by two serious bear markets, I compounded 13% per year, and that's because I was all gold and energy. It was just ridiculous. I'm a lopsided portfolio guy. And then I totally screwed the pooch on the teens. I mean, I compounded like 4% while everyone else was doing 12, 13, that sort of thing.
Yeah, for sure. So recently we had the whole event with the yen carry trade and that rotation. Many of the uranium equities got clobbered and stuff.
Yeah, I own those too.
Did you buy that dip?
No, I don't buy dips. I really, once I decide an idea is a good idea, then I just kind of steadily buy. But I took a big enough position, so I went into energy for two events told me to go into energy again. So it turns out I got knocked out of my energy funds by Fidelity. So I made this tremendous amount of money, and then energy went over the other side. and I didn't by any means give it all back, but I gave some of it back. And then I don't even pay attention to my statements. I just, I have my own tracking. And I found out that about a year earlier, Fidelity had thrown me out of the energy funds because they were said to be too speculative. These are Fidelity's, big cap Chevron, ExxonMobil. These are not too speculative. This is crazy. They put me in some life cycle fund. I said, get the hell out of here. And so I undid that, but I asked about 6 hedge fund managers, should I go back into energy? Because in theory, if I owned it, I should still own it, and they said, no, I'd wait. Actually, I think we're in a problem now. And they were correct. So then what happened is I kicked Exxon out of the Dow, and I go, oh, that's a buy signal. That day I went, boom, my head exploded. I said, they kicked Exxon, replaced it with Salesforce.com. There's a smart move for you. And then Jesse Felder pointed out that whereas at the peak, where I was big in energy, was 16% of the S&P was energy, and it was down to 2% now. I said, buy signal number 2. 2% of the S&P is occupied by companies that fuel the world. How is that rational? And so I went into energy in 2020. I actually have written evidence of it because Howard Lindzen one day said, give me your best trade. And it was somewhere in 2020. And I said ExxonMobil. Well, I didn't buy ExxonMobil per se. What I did is I bought the Fidelity Energy funds. They have Chevron and ExxonMobil and British Petroleum and all sorts of things like that. Again, I had a friend who was sufficiently dark that he bought like 40% of his retirement, he put into Smith and West, and I said, don't do that. I said, I agree with your darkness, but I said, what if one of their plants blows up? What if for some reason you find out the CEO's a crook? At least buy a bunch of gun makers, or maybe buy gun makers and preppers. And, I said, take the idea that you have that the world's going to be a dark place and diversify within that idea. And then it turns out Smith and Wesson did pretty well, but it was still not a smart move to one stock, half your savings.
That's not good. I mean,
that's not good.
That's
what Rick Rule refers to as got a hunch by a bunch.
Yeah, for sure. I mean, and that refers to obviously ETFs. They help mitigate some of the risk in terms of giving you a diversified amount of stocks, and so for me, in the recent fall, I was in URNM, the uranium fund, and I got into individual uranium stocks, and then when I saw the recent dip, I was like, okay, let me get back into the ETF because
so I don't trade it all. Oh, the other thing, I bought enough energy in 2020 to make it matter, but not enough, not a life-changing amount. And what I intend to do is I do believe the markets are going to easily cut in half at some point. And it might, I don't mean cut in half on a Tuesday. I mean cut in half by beating people down and pulling a Nikkei and whatever. At some point, when it's done cutting in half, absolutely every asset on the planet will go down. When the tide goes out, all boats sink. And so I'm just not excited about buying any risk assets right now. I think they'll all get pulled down in the whoosh. I think gold will get pulled down. Hopefully not so much, but and the mistake I made in 2009, I had tremendous cash, and I had a short fund with David Tice, and I liquidated it at Dow 6,700, which was pretty cool. But I shouldn't short. That's not my DNA, and I've sworn I'll never do that again. It's just not who I am. I don't believe in it. I think it's too risky. The downside is infinite. The upside is 100%. That's not a good investment to me. So I did at that point to neutralize a fund actually, and it worked well. to neutralize an energy fund, and it worked well. And I got out. And I started buying. I bought some more tobacco. The best buy I ever did probably was a purchase of a bunch of tobacco stocks when you couldn't give them away. And what finally sold me dirt cheap, low PEs, huge dividends. I'm trying to figure out that big $142 billion lawsuit lurking over their heads. I'm going, okay, they're not going to go out of business because then the states won't get paid. They've been ducking lawsuits for years. And then one day I read an article that said, if they lose the lawsuit, they're going to have hike cigarettes 50 cents a pack and pay it off over 20 years. I go, oh my God, it's a tax. The lawsuit's a tax. So I bought a bunch and it was phenomenally profitable. You look at the chart of Philip Morris or something, it's just been printing money for investors for decades. I started buying a little bit more tobacco, but I was convinced there was another halving still. And it's kind of the reverse of Bitcoin here, where the halvings. I was convinced in 2009 that we had not plumbed the bottom, and that when it bounced off it, I said no, it's going back down again. We did too much damage. What I didn't see coming was $30 trillion, $30 trillion of central bank intervention. I don't think there was a central banker in the world who thought they could put out 30 trillion. I think that was something they figured out on the fly. And so I didn't see that coming. I don't know anyone who did see it coming. I don't know anyone who can point to any tweet or any article saying, look, we're going to end up putting in tens of trillions of dollars to save the system when it blows up. And there's just no one could imagine you could do that without destroying the economic system. Strikes me as possible that we did destroy the economic system, and that this is the movie The Sixth Sense, and the guy just doesn't know he's dead. The mistake I made was there was a greed component where I'm going, okay, if it cuts in half again, I don't want to be caught by that. What I should have done is said, look, these stocks are reasonably priced now. And patience means that I'll probably get a reasonable return over the next 10 years. But on the other hand, the guys who thought that when they bought the Nikkei got crushed. So there's history can show that doesn't work.
How do you prevent? Well, I guess not prevent. I guess it's probably just, I'm just thinking of market psychology, investor psychology. For me, I've noticed one of my flaws is that when I see a big downturn in the market, I get too bearish. Like this happened in 2022. This happened, recently with the carry trade and such.
See, those frequencies are too high for me. That's high frequency trading for me. So I when the market went down 10%, and Jeremy Siegel's out there saying they have to do 2 75-point basis cut hikes, I said you're demented. You're an idiot. I mean, you're just a pinhead. And then I'll read some article in some Barron's or something, in March, that'll say, the market could go down 10% before the year's over. And I go, it could go down 10% by Friday. What are you talking about? And so I think so much of the financial system has forgotten how bad it can be. And I used to talk to my dad a lot. And I remember when I was bullish in the 90s, I was a tech bull. It doesn't sound like I would ever be a tech bull, does it? No, I was a tech bull. I really believed. So I had Dell, and I made 700% on WorldCom and got out. Right there, that was a win. And I got out of Dell with about 700%. Warner Lambert factor 4. Anyone could make money in the late 90s. Anyone could make money in the late 90s. And but I remember my dad saying, markets can go down for years and years and years. And I said to him, I think I had not yet wrapped my brain around the story. And I said to him, really? And he said, yeah, really. And then I started studying history, more history. Someone said it really funny. They said, you're born into the last chapter of history, right? So you're born. What year were you born, right? You're on the last day of history. You're born, and then you're living the last chapter, and it's like a whodunit mystery novel, and you're trying to understand what's happening? You go, the only way to understand is to go back and read the previous chapters. And so I did, and by mid '98, I'm going, oh dear, this is played out before, and this story doesn't end well. And so I started getting out middle of '98. Literally took half my assets and liquidated them in June of '98. And then it went down into the Asian crisis. I thought, you're a half genius, half idiot. And then it came back, and I dumped the rest. I said it's still a mania. And then the trickiest thing about getting out is getting back in. And as a trader, well, you better be wired to do that, right? But as an investor, it's really hard. It's hard to buy something that you sold much lower. And your brain just doesn't let you do it very easily. And so it's very hard to undo that. It's a lot easier to buy something that you sold much higher. And that's what the traders dream of doing, right? So no, I don't buy the dips. I am waiting for the blood in the street to dry up and blow away, and then I'm going to buy. That's my intention. I might not get a good opportunity. I mean, I'm 69 years old. By the time that opportunity comes, it wouldn't shock me if it was in 10 or 15 years. It's at 80 years old. I shouldn't be buying risk assets. So I may have seen the end of my risk asset purchasing. I don't know, but buying something that pays out a good solid dividend and has a solid balance sheet is not buying a risk asset, in my opinion. So that's what I'm looking for. I'm looking for companies that actually make money by making useful products, which in my opinion will not be NVIDIA. I think NVIDIA is going to be the global crossing, or Cisco or Sun Microsystems of the modern era. I'm pretty confident, actually, even though I don't know shit about NVIDIA. They don't make their own chips. The Chinese are now supposedly getting ready to put out a chip to compete with them. It's game over if that's the case.
Yeah, that's part of market cycles too. I mean, people pile into there, and then the competition comes, and then you get multiple companies that are producing high qualities of those products and everything. And so, I mean, because I can see that happening with Tesla. I mean, Tesla has a lot of competition now in terms of like how many cars.
Oh, yeah. Tesla has. I don't think Tesla has a market advantage, and to the extent that they had Elon Musk running it, it doesn't feel like he's running it right now, does it? He's kind of busy. He's preoccupied with other issues in his life. He's now a middle-aged man, and he cares about other things.
Yeah, for sure. All right, Dave. Appreciate you for coming on and everything. Where can people find you? Contact you, ask you questions, debate with you, argue with you.
YouTube. YouTube. I'm everywhere on YouTube. I'm at David B. Collum on Twitter. I do have an email that a person with a reasonable intellect can figure out how to find me. And if they can, as I like to say, I don't want to talk to them if they don't have that skill to find my email. And on a bad day, underneath my desk.
Yep, got it. That makes sense. Well, appreciate you for coming on again. Thank you for your time.